Lalit Agarwal, the management at VMart, is joining us on the show. Mr. Agarwal, hi. Thank you so much for making time and speaking with ET now. Well, you had hinted that, Q1 is going to be weak and that's how it has panned out. But my question to you is, when do you see a recovery in demand? Will it happen in Q2 or does it get pushed only to Q3 when the impact of the festive sales will start trickling in? I don't think we
Yeah.
can hear you
Yeah.
too well,
Hi.
Mr. Agarwal, I think.
Hi. 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 I understand. I was on mute. So the demand is. We will be expecting the demand to come only in the quarter three because this time the festival is also shifting from quarter two to quarter three. The starting of the Navratra, which is the auspicious period of Hindu festival, is coming completely in Q3. So the entire sale is going to move into Q3. So we'll see a demand recovery also coming in Q3 because we are also seeing some green shoots which have lined up in this particular quarter because the rate of degrowth has gone down. So now we are only at almost a neutral growth where we have also seen a quantity growth of 2.9%. So as a volume growth is already being seen because we had also reduced our prices and because we have taken a hit on the ASPs. We have seen a little degrowth in our overall sales, but yeah, largely we are confident that there is some green shoots that we are able to see. Q2 will be a little more muted, but Q3 will be able to see a good growth coming in.
Okay, so Q2 is going to be muted. Q3 is when you will see a recovery and you've started seeing the green shoots of the price cuts that you had taken in terms of the volume uptick. But that price cut that you were talking about and the heavy discounting that the industry had to take has been impacting your margins quite a bit. It's really down to just 7% versus 15% last year. What's the realistic number one should assume for entire FY24?
So, I mean, we've been always clear that last year was an aberration, and then that's not something that we will want to chase. And this year, because we also have a impact of the online acquisition that we did for LimeRoad, and there's some amount of money that we have to pay to float that apart, and so there's a lot of investment which is going in there. So looking at all of those, this is the kind of margin that we were expecting. But yeah, definitely the like for like growth is a very very important number, and there is some dent on the gross margin because of the ASP and also because of the shrinkage approach, because we have this time also corrected some kind of in some part of inventory because we had some inventory which was bought on the high raw material prices, and there we are taking some correction and we have taken some provision of shrinkage under the shrinkage column, which you are able to see 1.3%. So that's the reason you are able to see a little lower gross profit. Other than that, the expenses have gone up because the inflationary pressure is already continued. The manpower cost, the power and fuel energy cost especially has gone up almost to the tune of 10 to 12% at every store level. So we are seeing some growth there, and that is why you are able to see a low recovery. But yeah, largely we should be expecting a little similar number on the EBITDA line. That's what we are working on.
So you're saying for the entire EBITDA margin is likely to stay in that 7 to 9% kind of range?
Yeah, yeah.
Okay, so that's fair, but I just wanted to understand about the latest acquisition that you had done, LimeRoad. It's almost been a year to that acquisition, but it's not showing the kind of results that at least analysts on the street were expecting. What's your own takeaway of how LimeRoad is ramping up? When do you see it substantially contributing to the company's earnings as well in terms of profitability?
No, I think we as per the plan, the team is moving in the right direction, and the acquisition has been showing a good result because the plan was to correct the base, and then we have been able to see almost a 47-48% growth on the revenue front, and there is definitely some investment which is going on in this period of time to get back those customers, but these are going to taper away during the next 3 quarters, and that's how it is going to be. That's what our plans are also. But largely here we are targeting to increase the customer base, the total addressable market, and that addressable market, which is right now sitting at online, sitting in bigger cities, sitting on those across those computers, they are getting a little lazier and don't want to come to the store. So that kind of customer who is going to the online marketplaces and shopping there, you have to acquire that customer base. And there is a diversity customer. There is a diverse customer which is wearing, largely women customer in India, which is wearing more of ethnic wear. So that particular customer is also not able to get the product at the store level, all the product at the store level, because there is so much of diversity and you can't predict all the diversity in the store, and you have a limited space, you have limited inventory. That's where the whole marketplace model helps it. So it's a long-term investment. It is not going to reap in a result at a quarter level. So we have already anticipated a 1.5 to 2 year period till the time we get break even in that channel.
Sorry, Mr. Agarwal, a little less on time, so just wanted to get a quick word from you. In terms of FY24 as a whole, will it be a year of volume growth or volume decline? And similarly for revenue, will there be any sort of growth, or will it be a year of stabilization and maybe a bit of a, a steady number coming in terms of revenue?
No, I think we have given a growth even this quarter. There's been a revenue and the quantity growth both at that company level. There has been a like for like quantity growth also, which we have received in this particular quarter. So we will definitely expect a good amount of quantity growth and also a revenue growth, both at the like to like level as well as at the company level.
Double digit growth, volume and revenue?
Not at the like to like, but yeah, the growth will be there.
Okay, thank you, Mr. Agarwal. I tried my luck. Appreciate you joining us on the show. So that was the